The second methodology. Some of you will have seen this advertised. Some of you have even tried it. But it's called the Bedtime Trader. The Bedtime Trader is a methodology that I have been using for quite some time. A long time, in fact. I'm sure you will enjoy this because this is something you do at bedtime. What do you call bedtime? Well, that's entirely up to you. However, it is based on a close time of 11 p.m, 2300 hours. That is when the market on GKFX closes for the day and the new candle starts. As far as the trade is concerned, what we do and what I suggest you do is to look at the trading platform at around about 10 o'clock. Identify which trades are looking like they might present an opportunity, and then to trade them at 11 o'clock or 11:01. As soon as the candle closes, you are able to trade on this methodology. You then leave the trade for 24 hours. Go out and do something else. And you start the whole process again tomorrow night, which obviously you wouldn't because it's Saturday. But in an ordinary week, if this was Monday, you'd then be looking on Tuesday evening. And at 10 o'clock tomorrow night, you'll have a look at your trades or look at the charts to see what trades are presenting themselves for the evening. But you will also, of course, be looking at the ones you put on the night before. And you then have a judgment to either leave them till 11 o'clock or to take them off then. But this is a 24-hour trade, basically. You haven't got to wait for weeks and weeks and weeks. You haven't got to stay in it. All the results that we will tell you about are based, in the main, we have got a couple where we roll over, but in the main, on just straight 24 hours, you put it on at 11 p.m, 2300 hours, and you take it off the following evening. Right? And that's how it works. A lot of people find this an easy methodology to adapt to because they don't have to consider whether they're going to keep it going day after day after day, and it's just a sheer matter of win one day, win the next day, win the next day, loan to the market the next day, win to the next day, and so on. Right? You notice I didn't say a lot. Right, so what is the methodology? Okay, well, you've dealt with some of this already, but how to identify trading opportunities? What we are looking for is a Gravestone Doji. Now, what is a Gravestone Doji? That's a Gravestone Doji, isn't it? Somewhat. A true Gravestone Doji would have the open and close right at the bottom. This one's a little bit higher, but as you can see, totally insignificant in terms of the overall high and low. On its own, it doesn't tell you anything. However, when presented after a move to the upside and a Gravestone Doji, that is suggesting that tomorrow the market will go down. And in a very high percentage of times it will. Enough to make quite a handsome profit. So that is your Gravestone Doji. So what I want you to look for at 10 o'clock is one of them. Right? On the charts for today, that has followed one of those. A move upwards. Now I'm going to give you all the qualifying levels in a moment, because there are qualifying levels for how big this should be, how big that should be, what's your inside leg measurement, etc, etc. I'll give you all of that in a minute, but I just want you to get around the concept first of all. The concept is we want to identify these on the charts. GKFX, you're all sitting down, I've got 107 pairings for you to look through. So if you start at about 3 o'clock in the afternoon, you should have it finished by 10 o'clock. A guy came on my course and he said, I'm going to try this because it sounds fantastic. He said, but this 107 bothers me. He did it the following night and he did it in 3 minutes, 45 seconds. 107. Because literally all you have to do is go click, 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 and you're looking for one of those. And its counterpart, which is the Dragonfly Doji, which is that. And that's all you've got to look for. One of them or one of the other. And literally you can do it in 3. I do 107 pairings. I take my time, but it can't take me more than 5 or 10 minutes. And what I do at 10 o'clock is I just write on a sheet, got a sheet somewhere, but I just write on a sheet the pairings which are likely to give me what I'm looking for. Okay? The Dragonfly Doji needs to have followed one of those, a down move. And then, if I can just go back to the gravestone, we're looking for one of those that follows one of these. You'll notice, incidentally, to the very sharp-eyed people there, that the body's changed colour. That's only because I couldn't find one I only did this yesterday afternoon. But if you notice, that is in fact got a red body. Nobody noticed that, did they? This one's got a green body. But the body is insignificant in terms of the overall high to low. So what you are looking for is a Gravestone Doji that follows an up move. An up move means that the bulls are in control. This Gravestone Doji means that from when the market opened, the bulls pushed it all the way up there again, continuing their dominance during the course of the day. But before the close, which is here, and the most significant part of any candle, the bears had pushed it all the way back down again. That suggests that from when this closes at 2300 hours, the bears are still going to be in control and they will push it down there. Does that make sense? Well, rest assured it works. You'll be pleased to know. Sometimes it works and continues on.
That's what it should look like 24 hours later.
Yes, but this one here is the one that it follows the immediate day. Now I said you take it off in 24 hours.
24, that's one.
So that's where you should have taken it off.
Yeah.
And I have to say, in this particular instance, that's where 98% of us took it off. Because you should have done.
Yeah.
Okay? If you beat yourself up the next day because it carried on down, that's fine. But you shouldn't do that. All right? You should be very happy that in 24 hours you made that many pips. All right? So that's a Gravestone Doji. And on the Dragonfly Doji, on this particular day, the bulls have pushed it all the way up from the top. It opened up here. The bears have pushed it all the way down. Before the close, the bulls have pushed it all the way back up again. On this particular shot, the bears were in control, pushing it all the way down. Then when the market opened, it did go up a little bit, but again the bears pushed it all the way down, continuing their dominance. Then at the end, or before the end of the day, and before the close, the bulls pushed it all the way back up again. Not only did they push it all the way back up again, they actually pushed it back past the entry. That isn't particularly significant because what is significant is the size of this body, and that is getting to be a little large, but I'll give you the qualifying levels in a moment. That's what happened the next day. I haven't drawn these, I've taken these off MetaTrader charts in the last couple of weeks. This Dragonfly Doji has to conform to certain parameters. Why, you might ask yourself? Well, because that's what was asked of me. Because as far as I'm concerned, it was purely visual. And I was going along quite merrily before we decided to publish this. Quite merrily, making lots and lots of money just on these two dojis, Dragonfly and a Gravestone, and placing the trade and then taking it off the next night. Sometimes letting it run for a little longer, but making quite a handsome profit. And then we decided to publish it, and then the publisher said to me, well, how big's the doji? Well, big as that one there. No, you can't do that. You've got to actually tell us how big it is. And I said, well, okay, it's a percentage of the ATR, for instance. right? How big's the body? Well, I don't know. It looks right, you know? And they wanted everything measured. So I've had to measure everything. So there are parameters, right? And these parameters tell you exactly to the pip what that should be in terms of its size. It also tells you how far the previous day or days should have moved before you consider one of these. Because if that down move had only been 25 pips, that isn't significant. It's not a significant down move. These are reversal patterns, and therefore you need to have a big move down to get the reversal. The bigger the move down, and the bigger the tail telling you that the trend has continued, and then it comes back up before the end of the day, the more likelihood is the following day is going to move in the opposite direction. And that's all you want to know, whether it is likely to. Now, on this particular illustration, there's a grey line there. That actually is the current price action on that particular pairing that I hadn't noticed until I took that. But let's supposing that that low had hit an all-time low, because this happens time and time again. Your market's going along quite nicely and you've got a nice support line. The market's up here, starts to come down there, and all of a sudden you get one of those with the tail right on the line. I'm telling you that tomorrow it's going to go up. This is telling you that it's only going to do one thing, it's either going to bounce off the line or it's going to go down. Do you not think that the bulls might have seen that and said, time to go the other way, guys? Because that's where it's going to go tomorrow. So if it's on a support line, this can be a support line, it could be a 61.8 or 76.4 or whatever, or it could be the 200 DMA. It could be any of the support and resistance lines that we have mentioned earlier. But if it hits one of those, as well as being or having a long shadow, then the chances are the more of these things that are in place, the more likelihood that tomorrow it is actually going to go that way. And all we want is a high probability of it working, isn't it? And it does, because we can prove it to you. But anyway, our friends, the publishers, you have now had the Bedtime Trader given to you, yes? I suggest, don't suggest, I actually demand that you read it from cover to cover, because I've had to write it. And while I've been writing that, I've been sat on my boat and not enjoying the sail. Well, I've enjoyed the boat, because twice we've rewritten this, and we've just sat on the boat doing it, you know. It's a great office, but never mind. What you have got in there is how the methodology works, some screen dumps to show you how to put the trades on, and right at the back you've got a checklist, which tells you all the parameters and basics very, very quickly. I'm going to run through those now. Right, so the Doji parameters. And I'll draw one on here, just so that I can show you what we're talking about. And we are talking about a Gravestone Doji and a Dragonfly Doji. Everybody understands that now, don't they? Yeah? Okay. The high to low, high, too low, high, too low, of the both dojis, the Dragonfly and the Gravestone, should be equal to or greater than 70% of the ATR. So if that ATR that you were looking at is 100 pips on the bottom of the chart, you know, when we were looking at that one earlier, if it was 100 pips, then the high to low, this measurement here, has to be more than 70, doesn't it? Because it's 70% of ATR, equal to or greater than. So 70 qualifies, 71, 72, 69 wouldn't qualify. Yeah? Everybody got that? Right. So that's your first parameter. The second parameter is that the open and close of the Dragonfly Doji, this one here, has to be within the open and close, so that in fact is the body, if there is a body, yeah, has to be in the top 25%. So if that there is 100, then the open and close has to be in or be 75 or above. Yes? Otherwise, once it starts coming down here and getting down towards 50, it's just an ordinary doji. And we know from this morning that ordinary dojis just tell you there's indecision. And it could go either way. Whereas this is telling you that tomorrow, having followed a down move, that there's a very strong probability that the market will go up. Yes? Are you with me so far? Right. You can see how quickly you can work this out when you're going only through 107 pairings, can't you? Have you got your abacus ready? The open and close is in the bottom 25% of the overall high to low of a gravestone doji. This is a gravestone doji. So as long as this open and close is within this bottom 25%, that qualifies. If it's up here and it's 30%, then it doesn't. Yeah? Everybody with me so far? Really taking this in, they are absorbing this. That's what I like to see. The body, if any, so if it has got a body, which means that there was an open and a close, or it could have been the open and close the other way around, depending what colour. This one is green, yeah? So the open is below the close, yeah? If the body, if any, obviously if there's no body, that's even better. But if the body must not be more, i.e. the difference between the open and close, must not be more than 15% of the day's range. Not the average true range, because that covers 23 days. We're talking about this specific doji. So it has to be 15% between the open and close on this particular doji. So if that is 100 pips, that's that there. This body here mustn't be more than 15 pips. 0 to 15, fine. 16 above, no good. Do you think you can work this out very, very quickly and go through 107 pairings tonight? In 3 minutes. In 3 minutes 45. Don't exaggerate. I did say 3 minutes 45. Now then, that's the doji, of course, but this move, how big is this move? Well, this is a dragonfly doji, and we are anticipating, because we have had an up move, and it could be 1 or 2 candles, it could be 3, 4 or whatever, as long as they're all green. No reddies. Get a ready in the middle, you have to ignore that one and just take it from here. All right? So all these have to be green. And you will get this, because well, that's what the market's all about. Move, 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 move. Bulls, 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 and then the bears. Tomorrow, going to go that way. So this move higher, well, how big's that? Well, the move prior to the dragonfly should be equal to... Sorry, what did I say? I'm just testing to see whether you're awake. You are? Good? Right. What? There's a dragonfly there. That's a gravestone. Why didn't you say anything then? Oh. Listen, I've been dreaming about these things every night. You will be after you've done 107 and checked all this against it. The gravestone doji, we're suggesting he's going to go down tomorrow, right? Okay, the move prior to this Gravestone Doji should be equal to or greater than 70% of the ATR. Right? Now you've got a full qualification for the dojis, have you not? So you can instantly work out tonight whether they all qualify or not.
So is that one green bar, Kevin, is 70% or more, or can it be all three added together?
It can be all three added together, providing they're all green. Yeah. It can be the equivalent of a green doji like that, where the start of the move was from there to there. And as long as that's 70% of the ATR, this will become clear. All right? But I would like you to try and appreciate the workings out that you can do and do this, because if you can, it is so much easier, because you know what you're know what you're looking for. However, at much expense. Da, 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 da. Fanfare. No, don't do that. It's on this one. That says BTT signal, Bedtime Trader signal. This is a piece of automatic software that you put into MetaTrader, and it tells you which ones to trade, because it does all those calculations for you. So all you now have to do is to flick through, because that one says not a doji. When there is a signal, it will tell you that there is a signal. All right. A couple of changes here. The programmer that programmed this one, we've moved on to another programmer because we wanted it to expand it in the UK, and it is now over here, the BTT signal. So as long as you get a signal, it doesn't matter. What you'll get in that signal, you get the ATR told you for the past 23 days, 54 points. So there's no question of whether it's 0.54, 540, 5,400 or whatever. It tells you that the ATR for the last 23 days on this particular pairing is 54. It tells you that the range for today, on today's doji, is 55 points at the moment, because the day hasn't finished yet. Yeah, and you're not interested in it until it closes tonight. All right. The range is 55 points. That's the range of today. From the high to the low of today is 55 points. But you're not interested again. Bearing in mind, you'll begin looking at this at 10 o'clock. So this will be far more likely, if there is going to be one, to be telling you that there is one. Does everybody follow that? Well, you can look a bit more excited. Ooh. Right. It also tells you that the bar body, on the particular body that this is analysing today, is the current one over here somewhere. And the bar body at the moment is 42 pips. And that is saying that that is 76% of the ATR. So the bar body today is big enough. But it's also telling you that it's not a doji, so it could be anything. More importantly as well, it also tells you the spread, Janet. Yeah? The spread is 5 points. Sorry? Especially for you. I had it included. I said to the programme, Jan's coming on Friday, you better get it in there, or there's going to be trouble. Because of those 107 pairings, you're going to be horrified to know that there are pairings where the spread is 100 pips. Horrified to know. Which is a lot, and I would urge you to consider those very, very carefully. Anything over 50, a spread of 50, I would urge you to consider very, very carefully. If you're new to the game, I wouldn't touch them with a barge pole. You know, up to about 20 pips of spread is fine, all right? Because that's the amount that basically you lose as soon as you press the button, or loan to the market until it goes your way. You follow? That's the spread. But keep this in perspective, other than for a few exceptions. If the spread is 50, the range will be 550 or something like that. So although you're risking 50 at 10 pence a point, which is 5 quid, the potential is 50 quid because it's 500 pips. And that's the average true range. I'll show you some in the moment that we did not that long ago, where in the first day it moved 1,200 pips. Over 3 days we got 2,800 pips. Now at 10p that's £285. Have you ever put 10p on anything and got £285 back? This is very exciting. Look excited, please. Right. Can anybody see the Gravestone Doji there? Can anybody see that that is a huge Gravestone Doji? Would you like me to blow it up for you? Not literally. But look at the size of the shadow on it. Yeah? Also, the open and close were in the bottom 25% because the shadow was so long it conformed. Now, before all the measurements that I was asked to do, that to me would not have been even a consideration in terms of not taking it. I wouldn't even have bothered doing the calculations. To me, that was a huge, great Gravestone Doji, and that was going to show tomorrow it was going to go down.
Wick or shadow? You said
Shadow. Yeah, the official terminology of this thing here is a shadow. Wicks are something that you just, you know, the less initiated call them wicks. You will now call them shadows, Howard, please. You can call them what you like, as long as you know what I'm talking about. I refer to them as shadows because that is the official title. Because you don't normally have shadow wicks coming out the bottom, do you, of a candle? Right. So that's why they're called shadows. So the upper shadow there is huge. Yeah. It also followed a respectable up move. Yes? Whether that qualified on this particular one, I've no idea. What are we on, by the way? CHF CAD. This is the Swiss franc versus the Canadian dollar. But there's another reason. There's a couple of reasons there why that trade, to me, was very good. Suggestions, please?
DMAs.
Yes, thank you, Jan. There's resistance at the DMAs. It had gone through them but failed to close above them. Isn't that a reason to suggest that tomorrow it might go down because it failed to get above? And the next one?
End of a consolidation period.
End of a consolidation period, yes. And? Close below the DMAs. That isn't a particular, don't worry.
approaching a month end?
Sorry?
Approaching a month end?
May have been, don't know. Yeah, it probably was, yeah. But hasn't it been up to test the high? Fairly close to it? Not exactly, but it's been up to test the high and come all the way back down again. Never made it. Close below, back below the DMAs. Great trade. So, how do you trade it? I'm going to tell you in a moment. That there is where the X marks the spot where I put the stop. Ordinarily on Gravestone Dojis and Dragonfly Dojis, the stop loss goes at the bottom of the shadow or the top of the shadow. Bottom of the shadow when it's a dragonfly, top of the shadow when it's a gravestone. In other words, the gravestone is going to go that way, so your stop loss is up there. This one you're expecting to go that way, so your stop loss is there. That makes sense? Right. The only exception to that is, A, if you can afford it, is that when you get a situation like on here, and this is challenging